So, good morning. Good morning, everyone.
Good morning, good morning.
Good morning. So, I'm just gonna make a note for you guys right now. Um, Today is gonna be a very powerful lesson today. I hope you guys have your notebook, have your laptop up and running. Today is gonna change your life right now because I'm touching base on today stop loss, take profits, entry, risk to reward ratio. All of that is going to be touching base today on this lesson. And after we finish this lesson, you may want to watch this a few times to really get it. The time is moving so fast right now, guys, and I'm telling you, we have to actually take the time very seriously when it comes to trading. So quite a bit of things I have in store for you guys today. And we need to, because today is Wednesday. And by the time you know, the week is finished. And this is your second week right now. Okay. So this is the moment that I've been preparing you for right now. So thank you so much for joining in this morning. Now I'm about to share my MT4 screen with you guys out there. See what's up, see what's up, see what's up. All right. So guys, good morning again. Nadine, welcome. Latoya, welcome. Shannon, nice to see you. Susan and Renee, welcome, welcome, welcome. All right, let's get into the matter right now. It is 11:05, not waiting for anybody else. They missed the trade, basically. They missed the trade right now. So let's go. So remember in the lesson we talked about price, and we did say price moves the market. Price is what everything you're looking at the screen right now is affecting the market either in a bearish or a bullish trend. It doesn't matter, but price is taking place. Okay, so price is what is moving these candles right here. Now also we're going to be touching on the zone. We do know that there are different zones there, a higher zone, lower zone, lower lows, lower highs, higher lows. We'll touch on that. Now, in the market structure aspect of the lessons that we went through, we know that the market contract, expands, and go into a trend. We did say that. And then we did touch base on price and then price channel and price action, what's happening over in there. We did touch base into the trend lines also as well. And we did touch base in the moving averages and the purpose for that as well. Now, what I want to teach you guys today is the concept of entries and stop loss and take profit and how you can actually analyze the market with all that have been said over the last week or so with you guys with this batch, and how you can identify these areas and do your own take profit and stop loss. You need to know this. So for today, we're going to look at the concepts of entry, stop loss, and take profit. Also, I'm going to be looking at risk to reward ratio, right? So on that topic, the heading should be risk management. So risk management is one of the most important. The importance of risk management goes through the roof. It is one of the most important things that you learn in Forex trading, risk management. You have to get this padded as best as you can, okay? So we're gonna be looking at risk management today, right? And within risk management, we're gonna be looking at risk to reward ratio, how you can manage a trade, how do you enter a trade, either gonna be a buy trade or a sell trade. All right, so let's run through the charts. Pay attention, focus on the screen. All right, so we have a chart here, right? And is this currency pair is US versus CAD. So this is United States dollar versus the Canadian dollar, right? I'm gonna use this as an example today for you guys to really understand what's happening right here. Now, we're gonna look at the markets and we're gonna look at, for example, how does the market is happening, and we're gonna use some of the examples that we did before. So we know that price is happening right now in the market. We're gonna start here, and we see that the market is contracting right here, and it's for you guys to really identify the areas. It expands here, and then it goes into a trend, which is here is gonna be a bearish trend. It's going down, right? We know this. And this is where you can actually use your channel as well. So if you look right here, you'll see that this here is a tool you can use to actually identify the areas in the market. Okay, so we see that right now this is going to bullish trend, and then head on to a bearish trend going down. I'm going to take this off real quick, but it's going down and it contracts, expand, and it contracts here again. Just a quick recap, and then it expands and it continue to go back up into a trend. So you will always see this happen in the market. And here it is. And I want you guys to just keep on put this a part of your awareness. This is what is happening. So you need to know this. So that is there. I'm gonna label it in a bit. So this become bullish, and it continues, expand, contracts, go back into a trend. Same thing, it's happening. But overall, when you look at this chart right here, you will see that all of this from here goes all the way down here. This is one market that is happening in right now. You identify the market right here as a downtrend. So even though you're seeing it playing out, you have to look in the different time zones and the different dates. So if you look at the bottom of the screen right here, you'll see this says August 19. If you look across, you'll see this happening with the 20th. You move on up to the 20. Here it is, 21st, 24th, 25th of August, 26th. See it? So all this activity right here happens over a 4-day period. Okay, so very important. How you want to set up your back office and so on. Let's change color to red. So basically, the market is in a bearish state going down, and it continues to go down. So you can move this from here, go all the way down to the bottom, all the way down here. Okay. So we identify the areas and what the market is doing here as well. Right in front of you, you can see right here, the market contracts again. And what we mean by contracts, we know that the market is going sideways. The candles are on similar height and so on, and it's consolidating. At this point in time, you would not enter the market. We did say that in previous lessons. Also, it expands and then it goes into a trend. We did say that. Now, and that's what's happening right there. So it's always doing that. Either way. Now, what do you need to know? You need to identify the risk to reward ratio. Now, you see all these activity happen in the market, now reach the end of the chart. And you say, all right, I get what Alex is saying. I get what the teacher is saying. I see all of that risk to reward and I'm trying to see how the market structure move, and I see the contracts expand and go into a trend. I see that. But how do I take a trade? So I'm here now, and I see in the market here, and we did look at the moving average. So we do have a moving average of 50, the blue line. We have a moving average of 13, which is the purple line, and we have a moving average of 8. So my understanding is this now. The reason why you see here at the bottom, right here, is that you will see the line cross each other. The blue cross the white cross the purple, and so on. And at the higher level, you will see that the lower time frames, the moving average 8 and 13 is above the 50. And you can see right here, let's move this over here. You will see right here that what's happening in the market is going into a downtrend. Now, if you want to take entry and you realize that, okay, the market is continuing going to go down, I want to look at retracement. If you want to go all the way back down here. So I wonder if this candle, my prediction, is that it's going to go back from here. It's going to go from here all the way back down here. It's going to go all the way back down here to this area right here. This is known as retracement. So you wonder if the market is going to continue to go down. So how do we do an entry? So let's remove this line. Keep it nice and clean for you guys to get it. So we want to do an entry. So you can actually use your Fibonacci's as well. You can use this tool right here. It's called a Fibonacci. And you can put it at the bottom here. And if you think the market is going to go back to where it was before, you can actually pull it to where it was before. The higher lows. So if you think it's going to break here, continue down, you can put this in place. It's called a retracement. Now, you can do that. But how do we do the risk to reward ratio? What are we really looking at? So let's take off this for a minute. And let's look at it simplified. So I know that the market is going down. I can see it. But how am I going to do my stop loss and my take profit? I'm a risk to reward ratio. So if you were going to enter the market right here, and let me use right here, and you wanted it to take all these profits right here on this bullish trend going up, how would you enter the market? You would simply, I'm going to do this example first, and I'm going to do the other one as it relates to the market going down. How do you take your take profit at that point? Well, let's do the first one as an example. Here, you see that the market is going consolidating retest, contracts, and then it actually do a retest with the red candle here, and then it goes up into the trend. So your entry would have been here. So simply what you would do is go here, and this white line will represent your entry and your stop loss. So you will do something called risk to reward now. You're risking this amount of here, all of this down here, for the reward of all of this here. You see how much that is? So I want you guys to look into this very carefully. This is known as your risk to reward ratio. And I want you guys to pay attention very carefully. So here it is, right then. So you're risking this amount here. I'm gonna change its color. Put it to blue or something like that. Or yellow, bright color. See, actually, this is your risk to reward right here. And you actually want to go all the way down here because you don't want to go at the bottom of the candle here. So if it go against you, be stamped out of the trade. Okay, very important. So that's your risk to reward. So this will be an entry. Your risk to reward will be this. So this is be your risk. You're risking this amount of money to make all of this right here. Okay, and you can actually make it some more. It's about that. Okay, so your stop loss would be somewhere down here. So your stop loss, let's change this line to red. No. Okay, so your stop loss would be here. So let's put a text right here. So let me just put this right here. Just put it right here. So your stop loss, let me put it right beside the figure. Your stop loss would be this figure right here, 1.30157. That's your stop loss. Your take profit can be here. Your take profit can be here. Take profit 1, take profit 2, take profit 3, take profit 4 if you wish, and so on. So all these areas, I'm going to change these colors to be green. And time does move real fast. You see that? It's 11:21, guys. You see that? It's a lot to trading, but you guys have to practice. So your take profit would have been here, 1.31153, 11351, and so on, right? So all this area right here would be your take profit. All this would be your take profits, basically. See what I'm saying? So if you enter the market at that point in time, you may want to look at it that point. And this is risk to reward. You're risking this amount for this amount. All this activity right here. These red candles don't exist yet. All these candles don't exist yet. But just imagine that they don't exist. We're going to get to that in a minute. Okay? So we understand if you want to go in for a buy. That's what you would do. Okay? And that would be a buy trade. Buy trade. And this would be a buy trade. And these lines right here would be your, let's move it from here. Let's put this down right here for a minute. So all this would be a buy trade. I want to color code it, by the way. Change it to green. All this would be a buy trade. So this would be a take profit 1, 2, 3, 4. And it goes on because it continues up. So you could actually have take profit if you want. Let me just put a couple more lines there. Don't want to get you guys confused. all the way up, as far as you want to go. You can do that. Or you can actually watch the market. So you don't have to do all of this as well. You can actually just watch it and see how far it goes. So all this is going to be your take profit right here for a buy trade. Okay, very important. Now let's look at it from a different perspective. What if we want to actually sell? Because the market is going to go down further, and you're seeing this right in front of you right now, and you wanna continue with this trend. You see what's happening right here, and you actually wanna sell in the market right now. You see the candle going down, and I could do a sell trade right now in this if I wanted, because I can look to risk to reward right now, and this is a perfect example. So if you're gonna sell in the market right now, what you need to do is you're moving your entry. So your entry would be right here, somewhere up here. So this would be your entry right here. Right here, entry. And the market is going down. So what you want to do at this point in time, and I'm going to label it so you can understand. So we're going to enter the trade here. So this is entry now. And this trade is going to be a sell trade. So we're going to reverse it. Watch this now. The stop loss let's take off that. The stop loss would be up top. So your stop loss risk to reward ratio, and if you do this in trading, you can't go wrong. Very important. Very, very important. You don't know how far it's going to go down to, but if it goes back down to here or here, and these are lows, higher lows. So what you can do is, if you see this is happening, you don't know how far it's going to go. So what you can do is you can put your stop loss up here. And we're going for a sell trade now, guys, remember. So your stop loss is going to be somewhere up here. So let's change this line to red. Your stop loss is going to be here, somewhere up here. And don't put your stop loss just right here above the wick. Do not do that. Put the stop loss at least 13 or 10 or 50. Some people do that. Pips away from entry. But I do my 13 away from entry. So you can actually use a crosshair here and you pull it in the opposite direction. There's not much right here, but I'll go, yeah, somewhere right here. I'll work with that right here. Somewhere there. So right here is going to be my stop loss. So that's going to be my risk to reward. All right. So I'm risking this much here for the possibility of this candle keep on going down. All of this. So you would start taking take profit from here. Entry, the take profit be here. 1, 2, 3, 4, 5. You can. And if you think that it's going to continue to go down, so you can have 1 here, 2. All this happened already. But you think that the candle is going to keep on going down to your prediction to a higher lows that was before here, a retracement. All these areas can be a take profit, even this one. So you can actually even put your take profit here as well. So if you're going to hit this one. So 1, 2, 3, 4, 5, 6 take profits you have right here. And all of this is on a time zone of 4 hours. Right? And we're looking at see where the market is going. we do an analysis on a 1 hour time frame. So you'll see that it looks different on a 1 hour time frame. So I'm just using it as an example, guys, so you guys can see it. That's what it looks like on an hour time frame. And I can zoom up for you guys to see it properly. Let's go to the end, and that's what it looks like. Okay. So you actually, this is your risk to reward ratio. Entry is here. So I'm going to go back on a 4 hour time frame to just do it so it look clean cut and you guys can actually follow properly. So here we're going to change all these here to green. And these are called take profit zones, guys. Take profit zone, guys. So it's up to you how you want to do it. If I want to go right here right now, all this is going to be your zones. All that. You can move it right here. You want to have a next place to take profits. Green. And green. That's it right there. So I want you guys to look at it. So risk to reward is very much real. So if you want to trade, if the trade goes against you, you know where you're at. You can apply your Fibonacci's as well to the highest low here. Delete. Do a fib right here from the last low all the way down here. So if the market go all the way back down here to the lows, then you will see. And up here is supposed to be stop loss. See that? See that? That's your stop loss right here. This is be a risk. What you're risking. And all it is here would be your reward. All of this, my friends, would be your reward. And continue to go down. All this is going to be your take profit zones. Take profit zone. And I can put right here as a sell trade. Sell trade right here. All is going to be a sell trade. And I'm going to change this color to red. Let's see. See there? So all of this right here is your zone. All of this right here. Your take profit zone. Body understand? Got like 5 minutes, guys. Work with me here. Got it? Unmute your mic. Talk to me. Tell me that you understand. You guys understand?
Yep.
Sure? Sure?
Very sure.
All right. So now you know how to to, if you're gonna buy a trade, how you're gonna do it. If you wanna sell a trade, how to do it. And what we're gonna need to sharpen up on is in your entry and exits, okay? So you wanna monitor your trade and you wanna look at it, right? So contracts in the market expands, go into a trend that is always happening in the market, and how you can actually watch the proper setup so you can actually take your trades. So this trade is happening right now. So you could actually, if you want, you could put your stop loss wherever you want, as we did here, and we could put the take profit here. So once it kind of continue down about there, you can do your thing. So this is right now is a perfect setup, we call it, for a sell trade right here. I'm going to change the size of this text right here. It's too big, around 10. Yeah, that's all right. I don't know if you guys can see it, so I'm going to put it right there back. Clear? So that's how you do it right there. The risk to reward ratio, entry, your stop loss. And if you don't see in the risk to reward ratio, guys, stay out of the trade. Stay out of the trade. Very important. So if it goes back all the way to where it was before, all the way here, then you can see you have further take profits. And I have no doubt that right now the market will continue to be on a bearish trend. You can see it. It's there. It's evidence. And if you go back, you will see. So one of the next thing as well, guys, you need to go left. You need to go left in order to see what is happening right. You go left to see what's going to happen right. All right, very important right now. All right. So I hope this lesson was useful. I hope that you guys understand. And we're going to touch back base on a few of these lessons to come. But I want you guys to get the hang of what I'm saying and how you can actually analyze the market this way to actually make your money every day. Okay. Any questions? We got less than 5 minutes on the call. No? All right, let it sink in a bit. Anything that you guys don't understand before I move to our next chart?
Difficulty in getting on. Give them my email address and then.
So when we're looking at the risk reward ratio as well, we're gonna look at, you will see the different zones as well. We did go into that as well. And that is very much important as well, with the zone to take it. All right. So that's what I want to touch base on today. Not to stray too much, but I want you guys to have this in your brain to actually look and see what is happening as well. And throughout it, you will see as well the tweezer formation happening right here as well. You'll see it. And this tells me that it's going to go down as well. So all of the market is telling me, it's telling me that it keep on going down. Right through. There it is. Still a downtrend. Still a downtrend. It's still a downtrend. All of it. So until the market recycles, the market right now with US versus Canadian is on a downtrend and continue to be on a downtrend. So if you want to move it all the way from here to here, You continue to watch the market, all of that down here, see? And I want to change this trend line to a lower trend line to a thicker trend line so you guys can get it. There it is. All of this. Change it. Put it to a thicker trend line. Here it is. Still a downtrend. Still continue to be a downtrend. And it continues the same way. Here it is. If you want to pull it from here. And this is the level that I want you guys to be at. This is the level that I want you guys to be at. Still a downtrend. You see that? Still going low. See that? So it tells me that even the market retest goes back up. You have a few buyers in the market, few institutions jump in and eat up dumb money, which is retail traders, and sell off again, retest, and it's going right back down. See there? Can they keep on moving as well? Same thing. So what is gonna do this time? Gonna go back down here? Still doing the same thing, guys. I got a minute on the call. So I hope this lesson was very useful. And you guys can see your areas more clearer and what you guys need to do right now to actually make that money for yourself and for your family. So that's your stop loss. This is your risk. And here is going to be your reward. Reward. Risk to reward. All of this is your reward. All right, clear? Body clear? 30 seconds. All right, guys, see you soon. That's the class for today. Have a wonderful day. Bye-bye.
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 Bye.
Bye.